The biggest challenge for a debt collection has always been and will always be to start a dialogue with delinquent customer. The future of collection is dynamic, agile, and constantly evolving, driven by AI and ML that enable micro decision making. So, moving on to discuss the topic Innovating Delinquency Management Best Practices, Challenges, and the Way Forward. Delinquency prevention and management has been one of the most key critical areas of work in the lending life cycle. In today's digital-led era of lending, there has been a significant shift in business models led by NBFCs and fintechs, which is changing the overall dimension of the industry, including delinquency management. While the use of technology backed up by demand has led to a significant opportunity for growth for all, but at the same time, the industry is also challenged with issues of data privacy, regulatory changes, and significant changes in customer expectations. All of this play a significant impact on delinquency management. In light of the above opportunities and challenges, we would like to understand the role technology is expected to play in the prevention and management of delinquencies. To discuss the same, may I request Mr. Bhavin Parekh from SPOCTO. Can I request Mr. Bhavin Parekh from SPOCTO? Yes, sir. Can we all give a huge round of applause, please? So talking about SPOCTO, SPOCTO is an AL and ML company focused on delinquency prevention and management. SPOCTO currently serves 30 plus banks, NBFC and fintechs and processes more than 4 million accounts per month. SPOCTO has its presence across India and the Middle East and is set to open its operations in the US. So we have our moderator, Mr. Bhavin Parekh, co-founder and chief business officer, SPOCTO Solutions Private Limited. And to talk about him, so Mr. Bhavin Parekh, who has almost served 2 decades of collection industry experience, he's been instrumental in conceptualizing and implementing the concept of digital collections. He has been driven its adoption since inception and scaled it to processing 4 million transactions a month with an AUM of approximately $3 billion. Can we all give a huge round of applause to this, everybody? Bhavin led and pioneered implementation with 30 plus BFSI clients in India and Middle East and is driving the same in multiple international geographies with the agenda of Made in India, delivered to the world. And to continue with the topic, may I request the other panelists to kindly climb up the stage. May I request Mr. Parthasati Ralabandi, Chief Risk Officer, Northern Arc Capital. Please, sir. May I request Mr. Sarvanakumar Krishnamurthy, SVP, Network and Cybersecurity Technology Engineering, Yes Bank. May I request G. Subramaniam, Executive Director, Chief Risk and Operations, Aptus Value Housing Finance India Limited. May I also request Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited. Also may I request Dr. Harish Ramani, Practice Head, New Cybersecurity Operations, 3i Infotech. And handing over to the moderator, Mr. Bhavin Parekh.
Thank you, everyone. It's indeed a pleasure to be in a room filled with so many intelligent minds. While I know that we are holding you between the lunch, and we'll try to do justice to ensure that the time that we consume is worth it. And I've also been told by the organizers to ensure that I try to keep it as crisp as possible. While that's a difficult task, but I'll try my best. Thank you so much. While the first half of the day, I think we have spent enough in terms of understanding the challenges that we see in the NBFC and the fintech era. And besides, we have learned a great bit about how the industry is shaping up on the onboarding side of the business and the underwriting. We have seen elements of understanding the cybersecurity. We have seen about the data hosting and the other elements. While it logically builds up for the last leg of the lending life cycle, which is largely about getting the money back. We have spoken enough in the day to ensuring that how the money goes to the end customer, but at the same time, it would be equally important for us to focus upon how do we need to get it back, because that's the crux of the entire balance sheet. And to discuss that, I do have a great panel who come with great amount of experience in that. In interest of time, again, I would probably try to put question to an individual, but I would be more than happy for more individuals to contribute to the views. So with that, I was having a chat with Subramaniam sir, just backstage, and he had very interesting views about how things are shaping up, especially in context of the entire delinquency prevention and control. And I would want to start this session with getting his views about what he was explaining to me about how the payment ecosystem, the digital payment ecosystem in the country is helping the entire lending ecosystem get the money back. And he had some interesting views of the changes that he has seen in the current era. So, sir, if you can help us with some thoughts on that.
See, that's what I was explaining before to Parek, to Bhavin, about what is changing in retail finance collections is previously it used to be 100% cash. Now we see a lot of digital payments. Predominantly we see in Google Pay, in Phone Pay. The Google Pay dominates the scene in the market. And if you go to even a small vendor, you see that guy has a Google Pay and from there he collects. So since the revenue is coming from this kind of digital method, he is able to make his payment through digital. Suppose he does everything from cash, then obviously he will make the repayment by cash. So that is the biggest change we are seeing in the last 25 years, that this GPay dominates the market. And even in a very rural market, a small vendor is using GPay to the core. That is one thing. Second thing, on the point which you are asking about the collection agents. It is actually a very tricky question, because I found it most difficult to find an answer to that collection agent issue, because the aim of financier is to get the money back. Okay, honestly saying, that is the aim of any financier, be it bank or whatever it is. Now the question is, there are three collection agents. In my view, is that one is the bankers, where we deposit our NACH and we collect the money. There we need to be very careful when we send the details to the bank. It has to be in an encrypted form, so that I'm not worried about the bank side, but on the way, the data should not get misused. When we are sending the data and when we are getting back the bounces, on the way somebody should not hack it and take the data. So the encrypted version, as you give the data to the banker, is very important. Next thing is, on the digital front, we see a lot of improvements happening in the advanced calling. We can actually avoid people, and we do mechanization of advanced calling, so that the data loss can be completely eradicated. Then, of course, after the instrument is bounced, the first bucket, the X bucket, that can also be done through digital collections. You can send a SMS or anything to the customer can pay that. My view, till this time, be it advanced calling and be it X bucket, the digital success will be very high. But having come more than that, if the customer goes to 2 bucket and 3 bucket and goes to hard bucket, my feel is digital may not really work in a large extent for collecting the money. And when it goes to the next step, like script tracing, or when it goes for a legal recovery, ideally we give only data like telephone number and address to the collection agents, be it in-house or out-house. We don't give data like Aadhaar, PAN number and things like that. But when he goes more than 3 dues, when he goes for a skip, then of course we need to give the entire application, entire file, including the PAN data, other data, his references, his relatives, and most of the details to first skip trace him, then collect the money back. Even in the legal recovery, all these details are required, because we need to see what is his other movable assets, other immovable assets, and who are the earning members and other family, or can we go against garnishee of some of his creditors and things like that. So when you have this skip tracing and also the legal recovery, we require a complete data from the customer file. So that data we need to share with collection agents or recovery agents to get our money booked. So to that extent of skip tracing and legal recovery, I am very skeptical of anything happening. So to that extent, if there is a data loss, yes, there will be a data loss. Thanks, Bhavin.
Yeah.
Just to add to that one point,
Yeah, Kunal.
sir made, there is also a shift coming in terms of the people carrying cash with them.
Right.
With digital payment banks coming in, who have tied up with the last mile, like where a customer or a person can walk into a kirana store and he can deposit the money over there. So what it has done, it has enabled this certain amount of cash component to even come through the digital way through that route also. So even that has become a big enabler in the industry. And we as lenders, like what sir said, the primary job is to collect efficiently. So that mode is also during this COVID period has enabled us to bring down the cash component part of it, because handling cash is a big risk in itself. So I just wanted to add that piece.
Absolutely, absolutely. In fact, on those lines only, I picked up something interesting from your previous session, and I wanted to direct a question to you in that regards. You talked about phygital, and that being the next thing that you guys are probably trying to drive. So, especially in context of the delinquency management and the entire prevention and control, from the industry perspective, what are the elements? And as sir also rightly mentioned, in collections, it's never going to be 100% digital ever, and all of us understand that. But at the same time, when you talk about phygital, what are your thought perspective? How do you think phygital with the FOS, the technology, and the lender coming together is going to change the entire way the collections is getting done? And what are your expectations in terms of the AI ML companies and service providers like us helping you out and the problems that you would intend to solve?
See, first and foremost, in the scheme of things, let's understand, it's about cracking the code of giving the right kind of allocation. Whom to allocate what?
Right.
That is the biggest challenge in itself.
Absolutely.
You get a 90 plus confidence level in that, you're anyways home, because your cost of collection then gets considerably come down.
Right.
So that's point number one. And I'm also leaving you with a food for thought for that.
Right, right.
Point number two is, now that you've cracked, assuming this allocation methodology of whom to give soft collection, whom to give the mid-level buckets, and whom to give the hard buckets. After that, connecting those people to the customer, whether through SMS, whether through chatbots, or what technology has to be used for connection is the second piece of it.
Right.
Then the third piece comes to the those buckets which are either skip tracing buckets or legal settlement buckets.
Right.
There again, enabling those customers or those particular enabling the financiers to crack down on those customers through digital way.
Right.
Like in the legal settlement, why to actually send a physical paper to the customer when it comes to a legal notice? We can send it over a WhatsApp or as an attachment or some other way as well.
Right.
So these are 3 or 4 avenues in each and every bucket that we typically tend to see from a usage perspective.
Wonderful, wonderful. So when we talk about digital coming in a lot of stages, including say going to the feet on street, going to the notices and all of that, we're talking about a lot of data. So from that perspective, I would want to get the view from you, Mr. Savana Kumar, of how do you see the entire information security, and we also briefly spoke about that, right? And you had some very progressive views. We would want you to enlighten the crowd and the audience with that. But besides that, I had a very targeted and pointed thing that I also wanted your views upon. When we talk about the entire collection management, delinquency management process, there is a lot amount of data which is doing up and down between multiple different digital vendors. There is a lot that is going through, right from the last mile feet on street to the telecall center agencies, which are largely outsourced, even including in-house feet on street, and then there are various other models. When there is this quantum of data of the borrower leaving bank's premises and then coming back, there are good amount of information security controls that as a bank and lenders you would be concerned about. So what do you think is going to be the future, especially in this data sharing model, and how do you feel that the banks and the lenders can be ring fenced, especially when so much of quantum of data is going up and down?
Yeah, first of all, thanks for the brief question. So the whole day we're talking on more on the lending and the collections and the payment. So maybe some of them we are going to talk in a hot topic, which is we are going to save the data. So what is the data you guys are collecting or cooking? So how we are going to save the data? So that is one of the main challenges in a security perspective. So the threat is around everywhere. So I can cater in a two-way. One is on a more on a technology-wise. So we have to be battle up because the attackers and everything happening, they are smartest. So we cannot call, we should also smart. We should be more on a lethal. So then only we can able to combat them. So what are all the business is bringing and what is the volume of business happening, the bank transactions, at the end of the day, it's all a data. Data is a new oil. So how we are going to save and secure that? So there is enormous data exfiltration is happening. So what is the policies which we are going to make into that? So that's the reason. So there is a two aspects. Technology-wise, we can deploy all the DDoS attacks happening, what is at the perimeter, at the gateway level. So we are seeing different types of traffics coming up from the geo protection level.
Right.
So we need to restrict those areas. So where is your business volume? So today we talk everything in a cloud base. So that's the reason RBI made a very strict guideline. So all the data's processing, everything should be within the India.
Right.
So this is whoever doing the business model through completely with the financial, they have to adapt the RBI guidelines. So that is one of the key factor RBI coming into the picture is to restrict the data should not be processed outside the India. And we also have to be technology-wise as we adopting the cloud model. So the cloud solution providers, the complete cloud, we say the cloud pops. So
Right.
that should be within the India region. Even though the big player like an AWS and Azure,
Right.
we give the business to them, we give the complete data, completely hosting with them within the India region. That is what the RBI guideline says. So we should start thinking in that way to save how we are data. Because as we arrived as one of the largest data processing in the whole world as India, so
Right.
today, so we are going to be more than 1 trillion and data is processing in a day. So what we have to do is, we have to be secure the data wherever we are starting from the point. So that's the reason we started with the authentication mechanism, two-factor authentication, and we have started with an biometric base. So most of the business model which we talk about there, so
Right.
the people start, what I oversee in the next future, so more on a facial-based authentications where the fraudulent kind of an access can be reduced at least,
Right.
so that we will able to help the business to grow in that way. So that is one of the key points I like to address. And other side, the process or the policies where the information security always is a roadblock for the business. So
Right.
that is the way it's taken up every time, right?
Right.
So it's not, we should be bifurcate both the things. So the information security should understand the business requirement, and then based on that, they have to be deploy the policies. So starting from the vendor who is initiating the business with them, we should have the clear third-party vendor policies, process management. From day zero, we should clear with them, so that the information security should not come at the final moment of approval process or a give a go ahead or only during an audit time. So
Right.
rather than that, they have to be part of the complete application itself. So
Right.
from the discussion phase, from the BRD level, from the what is the product hunting they are doing it, and the testing level. So everything they should be part of that. Then they will have the role to play. So
Right.
that is what I like to highlight here.
Wonderful, great. And Mr. Harish, I think that's also one of your favorite areas. So we would like to get your views on the same thing.
Good afternoon. Again, see, information security, where you see it from the lending or the operational side is one definite thing. But more importantly, as Saravanan sir said, about process, policies, procedures, standards. So you just have to incorporate a little bit more on top of it, where how the processes are being defined, what kind of products are being used, and how these products are entrusted with people. Today, RBI has come out with a guideline saying all the data is supposed to be in, if it is in the cloud, it has supposed to be in Indian geographical region. And then you need to have that entire maintenance, operations, everything incorporated with it. And we're talking about RuPay kind of things coming in, and incorporation is also happening along with PCI-DSS simultaneously with PCI-DSS and RuPay. So if you really ask it, I'll define it from core technology standpoint. Say, we said network security, application security, API security, cloud security, security operations. So all of these things comes pretty much under the operations security, cybersecurity operations. So we keep calling that cyber ops, right? And definition of that is all along how you wanted to handle it, whether it's going to be from the perimeter level, or it is going to be where your data is going to be connected between your internal perimeter and external, where your customers are getting connected. So you see voice-based AI coming in. You see machine learning is playing a very important role where it reads emails. It can respond to you by voice within 30 seconds time. So we have amazing products coming up. How effectively is the API security coming in it? Since the morning, I've been listening to people talking about API applications. So how effectively are we making a contact with respect to these APIs? And what kind of security parameters are we really incorporating with respect to it? Again, yes, one more point very clearly mentioned by Sarunan sir is it should not be a roadblock. Security should not be a roadblock, right? But people are actually seeing it as a roadblock because it is not required at the first instance. When there is a problem, then everybody is pinpointing on the security parameter and saying data loss is happening because security is not being taken care of, not well taken care of, rather in that way. And how do you really segregate that? Is only by started to provide operations from the start, started to follow the compliance aspects along with the standards and procedures which are relevant to our land, law of the land, more importantly. So we're talking about NBFCs, which is more importantly from the law of the land. So we're also advising in other segment from the credit unions of the US or from the financial sectors of the Europe market. So they have their own laws of the lands. But what we are typically doing with information security is we are trying to tie up with the laws of the lands with India, but operating procedures are all being from the Western markets. So this is where the break is. And trying to see the operations with respect to commercialization. So you say X as a factor of cost, where I'm not able to get my money back. The collection has been a painful process. And Subramaniam sir said it's not going to be fully digital. Completely agree with you. Agree with anybody for that matter. I'm not from that background, brother. But it is being seen. I'm also, on the other side, a customer, lended loan, repaying loan. One loan, if I miss, I know what kind of problems that's taking place. How it is really creating a problem with API because what I'm trying to communicate is not being happening on the other side of the story. But how is my data being protected, right? That's really a sorrow part. Over and above, we keep talking about it a number of times. And most importantly, I see the bottom line where we start having a 7-stack process, starting with policies, procedures at the bottom, along with awareness and training. How effectively are we imparting training to those people? Because we're talking from the top line, where we're trying to protect the red corner, where it's the data, right? And we try to protect application, we are bringing in MFAs and all these technological advancements. But at the bottom line, it still continued to be on standards and protocols with awareness and, of course, training on core. See, why am I emphasizing training is, I've been trying to do some training for quite some time, for about a decade now, working with IIT Madras and IIT Bangalore kind of institutions. We've continued to have the same problem when I started with about 2000 and maybe in 10, 11, and we're talking about 11, 21, 22, pre-COVID, post-COVID. That problem is still continued to be the same in one side. On the other, it's all the cyber ops. We're talking about commercialization. Are we really looking for Indian commercialization or looking at the westernized commercialization? That's where we have to differentiate and want to probably bring in effective manners into it. That's what my summation would be.
Thank you. That was indeed insightful. And one thing I noticed the moment you said that IT does not have to be a roadblock, Mr. Pathasati had a big nod of the head. So I just wanted to know your perspective, sir. How do you think that IT, should play a more contributory, positive role, unlike what people usually perceive of them being the roadblock? And what are your views, especially in context of the lending life cycle and especially on collections?
Right. Yeah, absolutely. The data, or sharing of data, is something which is absolutely critical. And while that is so, and that is obviously how you collect,
Right.
while that is so, respect for the customer is something which is also important.
Right.
And the balance of that is what one tries to achieve. And when somebody is doing that, if it is seen as being a roadblock, then obviously it's a little bit of short-sightedness. In the long term, if you actually want to be able to collect,
Right.
and if you don't respect, that is when you actually get into problems, and that is actually why
Yeah.
I was
Hi.
I was basically nodding, or I was agreeing with him so
Yeah.
much, because seeing these information technology rules or privacy laws as a hindrance, as a roadblock, is really short-sightedness.
Right. So besides that, sir, in the post-COVID world, I think all of us spoke about how things have changed significantly for all the industry, especially for the entire debt management, the receivable management. There have been great progress that has happened, and some of them, sir, rightly highlighted. What are your views? How have you seen the market from both outside in and inside out, in terms of things which have seen some gradual changes? There are things which have seen some paradigm shifts. What are your views on this, and how do you see this, sir?
Right. Obviously, collections is a difficult business, right? I mean, all of us know that collections is a difficult business. Some of us who have actually been in the field and tried to do that would appreciate it even a lot more. A lot about collections, I think, has already been spoken by some of us, either in this panel or other panels. One area that, I mean, it's not, and COVID has nothing to do with it. It started even before that. One area on which actually I specifically wanted to speak about is collections in a co-lending sort of a situation, right? Co-lending is something which has gone up quite a bit in the last few years. And the way at least I look at it, it's going to be much bigger in future, right? What is a hard business, which is collections, becomes a lot more harder in the co-lending situation, right? And that is basically because of two reasons. In a co-lending situation, number one, there is an originator and there is actually a balance sheet lender. And the originator is not just originating. Most of the time, the services that are offered are origination, servicing, collections, and in a few cases, there are even FLDGs and these sort of things, right? So for the collections piece, the originator is actually already being paid a servicer fee. So to set up a parallel collection structure at the lender side is actually duplication of cost, which will make it unviable, right? So that is one big constraint that you face in that scenario. And the second, of course, is while the way the physical files used to come up for approval, and while in that structure you'll probably get similar amount of data between originator and the lender, right? In the current situation where most of the lending actually happens, or at least in terms of number of loans, if not in terms of volume, when it happens through, let's say, an app-based lending, and most of the data is actually not coming in terms of file, it actually comes on a software, in a LOS, API integrated LOS to you, et cetera, et cetera.
Right.
What happens is, while a lot of things like a KYC doc and these sort of things, while it is shared, a lot of data that is collected by the app is not really shared by the originator to the lender. So the amount of data that is available with the originator is significantly better than what is there with the lender. Right? So one is you don't have a parallel structure for collection, and second is the data that you have is probably inferior to what the originator has. And you, as a lender, get into collections only when you are not satisfied with the performance of the originator's collection. Right? And that is when you start, and you don't have the structure, and you don't have the data, how you actually can do better by taking over that portfolio and trying to collect. That's the conundrum a lot of us would face. I mean, already started facing, but will face a lot more in this scenario. Now, what is the way out? It actually comes down to strategy, because you obviously can't build up a parallel structure and keep it idle for a originator to fail, right? So it actually comes down to collection strategy. You actually develop a strategy to face this sort of a situation. And obviously, for entities like, I mean, a few of us are here, right? Obviously, you are one, Spocto is one, CreditGenix is one. A lot of these services are offered by these sort of companies, right? Is what you actually integrate into that strategy, such that you don't have this 9 months, 1 year sort of a lead time to set up a collection framework. Right? All this is actually figured in, and the partners who will actually come in that stage is already identified. Some amount of connect you already make, and that is actually how you try to manage. Now, in a few cases, obviously, even before it comes to the situation where you have to collect on behalf of the originator, you try to test it, right? And be ready to face that situation, which will actually help you in minimizing the cost with a strategy which is quick to get to its feet.
Right.
At a very broad level, it is not just about co-lending. Actually, if you are a lender to NBFCs who are on lending to retail, basically NBFCs which are on lending,
Right.
that's a risk that you actually run, right? I mean, if there is a stress situation even at a institutional lending level, one of the ways you try to solve that is actually by trying to take over some of the retail portfolio.
Right.
So it's not, while all this I have explained in terms of co-lending, this is something which is required even if you are an institutional lender into the NBFC space.
Right.
That is broadly how I see things evolving. Good space for a lot of people. You, Crogenix, and a few other companies I've seen here.
Right, sir.
It's a good space to be in.
Good, good. So you brought up a very interesting topic of co-lending.
Point.
Yeah, sir, before that, yeah.
See, we talked about delinquency management and AI and ML.
Right, sir.
My feel is that more than this, particularly we should use more AI and ML when we do the funding part of it.
Right.
See, we should do the analysis of our data to find out what to fund and what not to fund.
Right.
Because there is no general fit, because one company's profile will be generally different than the other company. So you can't have one general fit.
Right.
Okay, I know of one company in Chennai who does politicians and they are able to recover the money well.
Wow.
Whereas we generally put the politicians under negative list.
Must be run by a politician.
Your data is very important, and that is why the AI and ML should really work
Right.
to get you. Because my feeling is that if you don't do a good underwriting,
Right.
no amount of Jambuan is going to collect the money.
Right, absolutely. Yeah, thank you. Interestingly, we at Spoctor, we have already built in a score which is only delinquency prediction. And, while current delinquency models are largely based on the demographic information that you capture and try to make sense out of the financials of the customer, but there is a great bit that you need to understand from the past book and see which kinds are defaulting. And, there is a behavior-based score that we have, interestingly brought in. More than happy to have a separate chart on that. But while you have brought in the co-lending topic, Kunal, we just wanted your views in terms of how do you see the entire co-lending piece shaping up the risk for the lender. And as he rightly mentioned, the originator would be for certain part of it, but the risk stays onto the balance sheet. How do you see that is shaping up in future, because it is fairly fresh as compared to the traditional methods of lending? And what is your take on that?
I think, I definitely agree with what, I heard from my co-panelist. The thing is, when it comes to co-lending, you are actually kind of using two sets of brains to solve a single problem.
Right.
Let's put it in this way,
Right.
You may feel that, you have got a crack of this particular portfolio, but like, we started, it's not ever going to be, a situation where you've got a crack of a particular problem. And here the problem is whom to lend.
Right.
Because if you've got the crack, then, delinquencies will never exist. And if delinquencies will never exist, trust you me, this job of, being in NBFC lending will be very, very boring.
Okay.
I feel, collection is a far more interesting job than lending or, doing the underwriting.
Right.
Because, that's where you learn what is actually happening. Because like it said, it is easier to lend and, it's difficult to collect.
Absolutely.
That is the reason it's been said so.
Right.
So when it comes to the co-lending model, what we heard, him saying, it is at the end of the day, two people who are, lending to the same borrower jointly. So when we define the policy, it's actually two people defining the policy together. So even if you have a learning of a senior, lending partner, it's not always that the senior lending partner brings everything to the table.
Right.
You also learn from the new age fintech partners who are there, who will bring some or the other ways of connecting to the customer or underwriting the customer or, analyzing the behavioral part of the customer, because, it's just picking the brains.
Right.
So that's where I feel, the ball is definitely going to be changing. And we are definitely going to see an exciting time. Co-lending is a new way of lending, and we are all, as some of the lending partners, happy and excited to be either a co-lending partner or a co-lending, company as well who wants to lend as well. So because we have both kinds of models, where we lend along with certain fintech companies,
Right.
and we also, partner where we are the lenders, and then,
Originators, yeah.
there is a senior partner who will basically, be supporting us at the back end.
Right.
So it's going to be exciting time from that perspective, where two, sets of brains resolve one problem.
Wonderful, wonderful. That's great. And I like the kind of passion that all the NBFCs they bring when they talk about collections, because most of the time I keep on hearing from almost all the lenders, especially on the NBFC side. They say we are not in the lending business, we are in collection business, and all of that clearly comes out of the way right from Subramaniam himself to Kunal, how you guys speak about the nitty-gritties of collections. That brings me to a little grey side of the entire execution of collections. There are constantly incidents which are not great, with the data getting leaked and not getting used very well. So with you, sir, I just wanted to understand, Subramaniam sir, what is your view that in this time and environment when things are becoming so transparent and your consumer data is at stake and it is getting misused at times. How do you think that can be prevented better by all the lenders, including banks, NBFCs and others? And what are the expectations that you would have from the new age technologies who should come and help you guard this better?
As I told you before, on the question of advanced telecalling and predictive check bounces, digital technology will really help. There are so many institutions providing so kind of softwares. Without intervention, we can do that. So data leak will not be there.
Right.
The same way in the X bucket collections, it is possible.
Right.
But when it comes to hard bucket, when it comes to skip tracing, when it comes to legal recovery,
right,
still today we have not found a method of cracking that, or I have not found a vendor who can do that.
Right.
Predominantly because customer is also at a different level. We have to persuade. In fact, we have to force the customer to part with the money. So, to that extent, I think we will continue in the same way what we are doing now.
Right. So that makes it very clear. Yeah, Mr. Sapata, yeah.
So I can just add a bit.
Yeah.
Yeah, absolutely true, sir. Obviously the higher bucket collection, the harder bucket collection is obviously going to be difficult. But where it really helps is to arrest the flow into those buckets, right?
Right.
A large part of AI and ML help in this space would come in terms of predictive analysis of collections. I mean, before the first check bounce or even before the first EMI payment.
Right.
Our ability to assess as to which are the customers who are likely to default,
right,
and then put in the effort before the bounce actually happens.
Right.
More proactive, calling at that point of time, who should we call, who should not. Obviously, every call has a cost,
right?
So who should we call, who we should not call.
Right.
That is actually where a large part of the value addition from the ML techniques are. Basically, AI use is going to be. The harder buckets the loan gets into, possibly the more harder manual part of the collections probably come in. Just to reiterate what sir is saying.
So and that's the problem that I think as an industry we are trying to solve. Yeah.
Yeah, to add to that, just let's understand, when he's continuously talking about soft bucket versus hard bucket.
Correct.
The challenge is also to maintain the similar code of conduct, because, you're outsourcing the entire piece
Absolutely.
through a third party or maybe through an in-house solution.
Right.
So when it comes to hard bucket, things will be more firm.
Right.
Right. But how do you maintain a similar level of code of conduct?
Right. Right.
Because at the end of the day, you have to treat the customer in a, very, very, how do I say, in a very, very normal manner when it comes to, and, be empathetic to him as well.
Absolutely.
But, you also have to explain him the downside of it, that, his bureau scores will go down, and, the other side of it as well. But be within the circumference of the code of conduct. So when it comes to the hard bucket and soft bucket, that is also a big differentiation that one has to play.
Absolutely.
And, when we do that, that is the primary cause of differentiation. When we have to segregate a partner, how do you maintain as a partner, the level of decorum when it comes to, adhering to the code of conduct.
Right. And with RBI's own DRI guidelines, around the same, I think, which are not, stringently enforced on the NBFCs, but I'm sure all the, most of them do adhere to that. And what I'm hearing from the panel as a consensus is largely in the early stages, you feel that automation can definitely try to solve it independently and probably keep the data within and try to make more resolution out of it. But besides that, in late stages, you would want technology to enable that, but the physical component is always going to be there. It's going to be the phygital model, as you rightly mentioned. And in that, I think the need of the hour is to ensure that the person on ground is more compliant. So I think if technology can help there, besides solving the early stages, helping make it more compliant in the late stages is what I guess the requirement is coming out.
We also saw in skip tracing some of the technologies being used.
Right, sir.
Like they are able to track down on the Facebook, the Instagram,
Right,
and Naukri.com and various job sites.
right.
And we have also seen cases where we have traced guys using matrimonial sites.
Wow.
Okay, and
Yeah.
there are tech people working on that. Unfortunate to say that there are a lot of people who have come from UAE after taking loan and come to India.
Right, right.
So these banks have appointed people to search these people in India
Right.
to take back the money to UAE.
Right, right. So interestingly, we serve many customers in UAE, and that's one of the problem that we have been trying to solve. We have not gone to the extent of Shadi.com, but I think that's an interesting idea. My team should make a note of it. But I think that's really interesting. So that brings me to the next question that I wanted to understand. In the current age of the mobile revolution, the jam that we spoke about in morning, everybody currently is contactable on some of the other numbers, right? So there is no delinquent which is currently not having a mobile number outside to connect with. But the problem that lenders do face is the mobile number or the contact points that they have might not be the updated one. And again, that remains an area of concern always, the entire contactability issue as the stage progresses. There are some innovative solutions that I've heard from them. But what do you think, should be and help probably from some regulators, wherein probably an access to the mobile number through TRI or somebody else, probably what are the kind of things that you expect from the central bodies, if I can get the view of the panel, that probably would help solve you, besides you only trying to look up for the data. There is this entire account aggregation thing coming into place, wherein you might get a visibility down the line. Currently it's for bank, NBFCs may also come in play. But I just would want to understand the view of this panel in this context of what are your asks from the regulators or the things that you would want to have better access to the newer updated information of the customer. Yeah.
So one of the main pain area, like everybody is talking on the collections and lending. So what I could see on the security per se or information security per se. So the consolidation is one of the key factor, which is they not able to achieve it, where the other business model in the same fintech they started. So consolidating the data is one of the key thing. So for that, the automation is play a very major role into that one. So how we have to do that consolidation, because it's more on the track and trace mechanism. So it's more where the manual effort will be there into that one. So the main consolidation should start from putting all the data into the centralized store area. So the data centralized right now, it is not happening more on the lending. So it is happening at the local breakouts level, and those data should come to the central link. It takes a lot of durations, and from there itself the data mismatches and the track and trace is getting lost continually. So that is one point I like to highlight. So when we have the more data consolidation happening at the central one storage level, so where we can bring the visibility part, so that able to help the track and trace mechanism better, so that helps the business also.
Right. So you're talking about more of collaboration. And collaboration probably, in morning also we heard from many, now open architectures is probably the way forward. Unless people collaborate, I don't think, it would be of a great advantage to their businesses. So I think collaboration is one of the things that probably is the future. And I think as IT guys, you guys might have otherwise view on collaboration, but good to hear IT guy talk about data getting collaborated with multiple different partners. I think I had many more, but I think we are almost, yeah.
One small point to add to what he was saying. There is actually a line up to which you would not want to cross in terms of skip tracing, right?
Right.
And, while you would want to try the mobile number or the Facebook, etc., you don't want to get into the relatives, tracing them and all that,
Right.
right? When it is left to individual agencies, individual NBFCs to do that,
Right.
or individual collection companies to do that, probably that's a line that, I mean, one of the regulatory concerns would be that the line would be crossed on and off.
Correct.
Possibly one central organization, I mean, like you have any of these organizations, like a bureaus or like the
Correct.
CERSI that we have. If there is some sort of an organization which actually can take this as a service in
Right.
terms of consolidating all the collection
Wonderful.
on the contacts information,
Right.
that's probably something that actually can work as a solution for the industry.
Wonderful, wonderful. That's really helpful. So I think, we have got great views, and, as we understood, what are the expectations that the NBFCs and you guys have from the new age technology, and we have got a great direction in terms of the things that you guys are trying to do, and that also, I'm sure, would give great amount of insights to the audience. Besides that, there are some personal takeaways, including Shadi.com for me. Yeah, so I think, but it was great interacting with all of you. Thank you so much. Thank you.
Thank you to all the panelists, and thank you, moderator. And to begin with, may I request Dr. Ravi Gupta to kindly climb up the stage and to join our moderator, Bhavin Parekh, in felicitating the other panelists. And to start with, may I request Parthasarathi Ralabandi, Chief Risk Officer, Northern Arc Capital, to kindly come forward. And may we have a memento as a token of love and gratitude. Can we have a huge round of applause, everybody present here? Moving on, may I request Mr. Sarvanakumar Krishnamurthy, SVP Network and Cybersecurity Technology, Engineering, Yes Bank, to kindly come forward. Followed by this, may I request G. Subramaniam, Executive Director, Chief Risk and Operations, Aptus Value Housing Finance India Limited, to kindly come forward, please, sir. Moving on to next, may I request Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited, to kindly come forward. May I now request Mr. Ajit Kumar, Chief Operating Officer, Credit Beat, to kindly climb up the stage and to felicitate Mr. Bhavin Parekh, Co-founder and Chief Business Officer, Spocto Solutions Private Limited. Please, sir. Can we have a huge round of applause? Following that, may I request Dr. Harish Ramani, Practice Head, New Cybersecurity Operations, 3i Infotech, to kindly come forward. Please, sir. Audience, some energy. Let's give a huge round of applause. Thank you. And may I request all the panelists, moderator, Dr. Ravi sir, to kindly come forward and join for a picture. Sir, hold back. Also, I would request you to join for a picture with the Bank and Finance Post magazine as well. So here it goes. Once again, a huge round of applause to the entire team of panelists and the moderator along with Dr. Ravi Gupta sir on stage.